Hello guys, welcome back with me. Don't forget to like, comment, share, and subscribe. Oil price is up after Basra's spill, but log weekly decline. New York Reuters oil prices rose slightly on Friday as a spill at Iraq's Basra terminal operate likely to constrain crude supply, but remained down on the week on fears that hefty interest rate increase will curb global economic growth and demand for fuel. Brent crude futures settled at 91.35 a barrel, up 51 cents, while United States West Texas Intermediate or WTI crude futures settled at 85.11 a barrel, up 1 cent. Both benchmarks were down by nearly 2% on the week, hurt partly by the United States dollar's strong run, which makes oil more expensive for buyers using other currencies. The dollar index was largely flat on the day, but up for its fourth week in 5 weeks. In the third quarter so far, both Brent and WTI are down about 20% for the biggest quarterly percentage declines since the start of the COVID-19 pandemic in 2020. Oil exports from Iraq's Basra oil terminal are being gradually resumed after they were held last night due to spillage which has been contained, Basra Oil Company said. The spill at the port, which has 4 loading platforms and can export up to 1.8 mln barrels per day, drove up prices on the prospect of lower global crude supply. That definitely threw a scare of the market because the initial report was that those barrels were going to be out of the market for some time, said Jock Hilduff, partner at Gain Capital LNC in New York. Investors are bracing for a large increase to United States interest rates, which could lead to a recession and reduce fuel demand. The Federal Reserve is widely expected to raise its benchmark overnight interest rates by 75 basis points at September 20 until 21 policy meeting. The increasing likelihood of global recessions and as underscored by the recent revenue downturn in equities could continue to provide a limiter of upside oil price possibilities into next month and possibly beyond, Jim Ritterbusch of Ritterbusch and Associates said in a note. The market also was rattled by the International Energy Agency outlook for almost zero growth in oil demand in the fourth quarter owing the weaker demand outlook in China. Both the IMF and World Bank warned that the global economy could tip into recession next year. This spells bad news for the demand side of the oil coin and comes a day after IEA forecast on oil demand, said PVM analyst Stephen Brannock. Recession fears coupled with higher United States interest rate expectation made for a potent risk cocktail. Other analysts said sentiment suffered from comments by the United States Department of Energy that it was unlikely to seek to refill the strategic petroleum reserve until after the 20 and 23 financial year. On the supply side, the market has found some support on dwindling expectation of a return of Iranian crude as Western officials play down prospect of reviving a nuclear accord with Tehran. Oil prices could also be supported in the fourth quarter if OPEC plus members cut productions, which will be discussed at the group's October meeting. Europe faced an energy crisis driven by uncertainty on oil and gas supply from Russia. United States crude supply operate headed for an increase as energy firms this week add oil and natural gas rate for the first time in 3 weeks as relatively high crude prices encouraged some fears to drill more, mainly in the Permian Basin, according to energy service firm Baker Hughes Co. Dollar edged down but post gains for weak yuan slips past key level. New York Reuters dollar index was down slightly on Friday but reciting again for the week as investors expected the United States Federal Reserve to remain aggressive when it hikes interest rates next week, while China's yuan is it past the key threshold of 7 per dollar. I think that's all from me. Don't forget to like, comment, share, and subscribe this channel. Bye.